Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, November 11th, 2025. It is 11:25 a.m. Eastern Time, so I'm starting the video. So a lot of 11 and 25s in there. And what we're going to do, a quick look at the markets and just some of the things I'm watching. Yesterday was pretty much to the end of the day a non-event. We were, I got you a bunch of updates out early, and then there was really no change. We kind of stalled out there, stopped. This is a post I got out to you early in the day, pre-market. Oh no, it was right after the market opened. My bad. I can see they're always time stamped, 10 o'clock. Gave you a bounce target zone on NQ, like a likely endpoint for the falling wedge breakout. Again, that was a falling wedge posted on Friday, which never broke out. And so if we couldn't take it out, we'd go down to T5. We again versed the hair shy of T5, and that's it. So that was yesterday. Let's go to today. So far, we've been capped towards the bottom of that bounce target zone. I had to color that in on the screen shouting software. That's the target zone right there. So far a rejection. So far so good. But more importantly, I want to get to the semis. But I want to just show you. So that's it, and that remains. We'll get another push up, and again, like I said, anything much above that, above this 25,887 level, in my opinion, is going to be a bullish technical event. Which was going to increase the odds. I'll probably try to shoot up to make a marginal new. And again, if it happens soon, that's the operative word. A couple operative words in there, assuming it's just a marginal new high, which I suspect is all it would be. But again, that hasn't happened. And as I like to say, resistance is resistance until unless taken out. So remember, this is small time, short-term stuff, 60-minute chart, hourly candlesticks. I'm about to turn my focus to the daily charts. Just wanted to give you an update there. For you QQQ traders, these are the same levels on the chart. This was our short entry here. We hit our first, second, third, reversed a little shy of T4 on Friday targets and took out that bullish falling wedge. Again, on the future, well, it's here too, but it shows better on the futures with the divergence and all that. And then rallied back to this same level right there. You have a gap in there, first target and all that good stuff. So it's a lot of noise. Remember, volatility's woken up, perked up lately. So I still very much like and maintain those longer term targets on the VIX. But you're going to need to take out the recent lows, and that will, if and when that happens, we will most likely see the VIX start to move up very sharply, kind of like that mode I believe natural gas has now entered, now that we've taken out T1, where you start to get the very impulsive, much sharper moves up with fewer pullbacks, and then just don't let the shorts out, don't let the longs in. But again, work to be done. I'm going to give you all that work in these videos, or this video. So again, that work is first things first on the NASDAQ 100 to take out last week's lows. Within the NASDAQ 100, really within the stock market, there's the stock. This is Nvidia, the everything stock, the largest, first $5 trillion company, even though it no longer holds that title, but who cares? It's up and down. The largest component of the S&P 500, the NASDAQ 100, the poster child of the AI bubble. It doesn't need an introduction. You guys know what Nvidia is. And so they're reporting next week. So take the Nvidia earnings, take what we just had a couple weeks ago, the MAG 7, 8, whatever you want to call them, the majority of those, all but this one, Apple, Amazon, Microsoft, Meta, wrap all those up into one, combine it with a Fed meeting, which we had a couple weeks ago, and then that's pretty much what this is going to be for the market. And it may prove to be a non-event. It may prove to be continuation of the existing trend, or it may prove to be that catalyst that takes this one down. I've said this many times before, but it bears repeating. When you're going into earnings, if a chart to me is indeterminable, meaning I look at it, I don't have a strong opinion, can't make heads or tails of it, then it's a crapshoot. And in a bull market, you're probably going to go up after earnings. In a bear market, you probably go down. But it's just a crapshoot, and I don't bet those. But if there's clear divergence or clear case that you can make, in this case, that's it. We have big negative divergence, been building now since really on the RSI about this point right here. This is where both indicators started to diverge, right about where I drew it there. you have this uptrend line, and again, you have that ever so key 50-day moving average, which just does a phenomenal job of containing a lot of tech stocks and semis. So that's it. So we'll see what happens between now and then. Just keep in mind that any breakdowns that occur within a week or so before earnings or breakouts, they have a higher rate of failing. It doesn't mean they can't stick. It's just you're going to get that kind of whipsaw because earnings is going to change everything. So look, you guys know my thoughts on where I think this market's going. We have sell signals in place on the NASDAQ 100. They're back again on the, well, they never really left on the semis. I'm going to get to that in a second. And so therefore, I'm in that mode where I'm going to highlight the objective levels to short, stay short, not, get out of shorts. And again, I just showed you on the NASDAQ 100 what I think will happen there. Unfortunately, you're going to have, kind of this, I don't know what to call it, not blackout period. We're going to get the government data back online soon. I expect that to happen once the shutdown officially ends. But again, I've already commented on this many times. You can trade off fundamentals all day long. Good luck with that. So we're going to trade off the technicals, and let's see what happens. We have a week to go. Again, so that one looks like after earnings it's going to go down. And if there's anything that's going to take the market down that I can think of right now, again, there's we call black swan events, which are unpredictable, pretty much gray swans, which are those, and this what I would call it a gray swan event, something that obviously I think even the most ardent bull can recognize should the market not like what Nvidia is selling. Again, it's not. It's completely irrelevant what they report. We know they're going to report this best quarter ever, blowout earnings. Again, they have more demand than they can manufacture chips. It's about what the market's reaction is to both their numbers and then what they say going forward guidance. And that's the important thing. And sometimes that takes a couple days after the earnings report to let the dust settle. This is the weekly chart, again, with longer term targets. So all right, so we'll see where that goes. And again, anything that happens between now and then is kind of noise. Nvidia's been bouncing around, broke this little minor 60-minute uptrend line. But let's get to the semis, because that is obviously the biggest semi of all, king of them. And there it is. So SOX yesterday, I've said this repeatedly, especially recently, if you have to squint to see if a trend line has been broken, either to the upside or downside, give it the benefit of the doubt. And so that effectively we closed, again, a hair. You really have to zoom in. Oh, the body of that candle is above the trend line the way I have it drawn here. So that's effectively a back test. We're back below the trend line. So this is the most important development today, right now. Yesterday, like I said, put on pause. When you're above to me, this is the only other sector, big sector, that I really need to see go is the financials. I'm going to get to those in a second. But that was a sell signal, as I said on Friday, a solid sell signal. Yesterday we had a relief rally based on the expectation the shutdown is going to be over soon. But again, I've spoke to that many times too. Absolutely insane for two reasons. Number one, we never had a correction really to, since it started. We're 40 days plus into it. And so the stock market was just recently at all-time highs. So the stock market, it was a non-event to the stock market. So a relief rally for what? Relief from what? That is, if you had a big correction, yes, that makes sense. And the other thing is that was anybody other short of a fool would know that, this is the longest shutdown in history of the entire government, U.S. government. So we knew it was coming to an end. It was just a matter of time. And every day when you break a record, it's right around the corner. So the market should have fully priced that in, that a shutdown was coming. So again, it's kind of ridiculous that they cite yesterday to being it would take it for whatever it's worth. So listen, we can sit here and talk all day long about fundamentals and why the market went up or down. The media is always going to retrofit a headline to any move. All I can tell you is right now we're back below there. I can also tell you right now the day is very young. So, there's still a chance for that trend line to be solidly recovered. As of now, it hasn't been. So that keeps that sell signal intact on the semis. Again, breakdown, back test effectively. Again, close enough that you have to squint to see if you're above it. Say that I addressed that yesterday before we even did it, I believe, that you'd have to clearly get back above there. So now, with that being said, wobbling. This is why the VIX has woken up lately. We're starting to see this is low volatility, slow grind, almost no volatility on the up move once we broke above that level. This is expanding volatility. So you're going to get, especially in a very sector with a high beta, meaning it moves a lot more than the S&P 500 up and down day to day, like natural gas is high beta, Bitcoin's a high beta instrument. You're going to get these little, carry throughs sometimes that'll pierce levels. But again, I'm trying to keep it simple right here. The 50-day moving average and Friday's lows, that's the big number. In fact, I didn't have a single price alert fire other than UNG today, but I haven't had any alerts go off in the last 2 days. So that's why I didn't do a closing market wrap, because there was no update from what I did earlier in the day. We pretty much closed about where I gave you all the other updates. So we'll watch this. And again, if it does this, that's, this right now, again, that's on a sell signal. And if it solidly gets back above there, take it for what it is. And the takeaway for me is, you do you, but my preference is to hold off and not short any more of the NASDAQ 100 or tech, anything that's high correlated to the stock market or the NASDAQ, if the semis regain that trend line. Again, this is a shoe I was waiting to drop. It dropped. And then the other one, until this sector breaks, market's not going anywhere, in my opinion, anywhere big. Semis can do what they want, but this is the financials. Put in a divergent high, broke trend lines, been moving lower, but as I covered yesterday, you need to take out this 5130-ish and intersecting 200-day moving averages, and we're comfortably above it now. So the financials have been holding up well. There are pockets of the financials, of course, that I've been focusing on quite actively, one of those being BDCs, business development companies, private credit, and I think you would struggle to find anybody in the world that could call this thing down like that. Down to the 4th target, final target reverse, went long. I gave you 3 targets at the time, but then I revised it. And this is what I do. I'm a flexible trader. I'll modify my trading plan if and when something changes, or sometimes it's intuition, gut feel. So we had an exit, perfect reversal, canceled that target, told you T2, we're going to close it out. And nice pullback, nice exit. That reminds me, as I was running through the trade ideas, that's what I do. I did the same exact thing with that Ruger trade I gave you guys. I gave you 4 targets and posted that final update right here on October 8th. For the reason stated, we're going to close it out at T3. I'm canceling T4. And this is why I find value in being flexible as a trader. Being able to adjust, adapt, change your trading plan, sometimes being bullish on something and turn around if evidence presents being bearish. No, I didn't short it there, but I also told you that a break of that trend line as well as hit a T3 would most likely bring in the selling. And look at that. That's just a textbook exit. And it's not the only one. We've done plenty of those. That BIZZ. I gave you a new trade idea today on AMBC, but it's actually, I gave this to, we've traded this. I've followed this stock for years and, follow almost everything out in the market, to be honest with you. But there's an example right there of a perfect exit. We hit T4 on that one back then. And that was back in October 2023. Queued that one up because we've traded this several times since. So there was the post back there, October 23rd. Again, perfect exit. This is what, we don't always get them all. Nobody bats 1,000. I say that often, but this is where the money is made. It's trading, a diversified portfolio, spreading your bets. And I say that because there's another recent comment. You just got a few people hung up on the NASDAQ 100 only, and critical of any of those trades that don't immediately pan out or get stopped out. And so I just want to let you know we're back into this one, and I also gave it to you in a video recently as an unofficial trade idea. Remember, official trade ideas, when I post something on the homepage, as you got today with this one, you just click on the tag. That'll queue up all the coverage of AMBC. So this is the new one right here, and it's been on my radar. We last time I covered in a video was right here. We shorted it, and I give you 2 targets, 810 and the uptrend line. 810 was hit, and then right after that, a perfect tag at that final target I gave you in that video of the uptrend line. Now we've come full circle. The divergence has grown even larger, and now you have a total of 4 targets. Max stop, as I said in there, means if you're targeting that gives you better than a 3-to-1 RR, very attractive. I think it might be a 4-to-1 RR. And so if you're only going to target a pullback to T1 or 2, which would again be another drop to the uptrend line, that would be a drop of about 15% or so, then you'd want to use a lower stop. A 3-to-1 RR would give you a 5% stop. That'd be somewhere about there-ish right there, about 1082, give or take. All right, so that's it. And like any trade, it either works out or it doesn't. So it's objective. Take it, don't take it, up to you. Okay, like I said, only one alert today so far, and I give you these longer term I've covered these same levels in the previous videos, and if and I keep updating. Then futures are always rolling, so it's a different chart each time. The levels change, especially more so on natural gas. And what I mean by that is stock futures like the NQ, Nasdaq 100, and RTY, which if I didn't cover that, we hit that trend line I covered yesterday. We're at it right now, the downtrend line. So the NQ and RTY, or the small caps. This is the same as IWM. And as I often say, if you trade futures, but you don't, the RTYs are too big for you leverage-wise, they have the M2Ks, that's forward slash, what I use for futures. And that's the mini, and it trades off these same exact price levels, just a smaller multiplier. And so the same story, it's objective short here with a stop somewhat above. But the big level we're going to need to take out that, again, it's last Friday's lows, and on the futures, that's about 23.87. And when that goes, that will most likely open the door for more selling. So, today I'm going to kind of just see. Let's see if the semis keep that breakdown in effect. That's probably the biggest thing to watch right now. Again, I'm keeping an eye on the financials. I already covered PSP. Didn't I? Yep, I did. Sorry, PSP. I did BIZD. And that continues to, be a yellow or red flag to me for the whole stock market. And then, of course, they're very closely related. Private equity, PSP, a lot of the same companies. They're doing private equity and private credit too. And, so this is also a kind of a tell of what's going on there. It is a subsector of the financial sector, but you have your big banks, which are always, they've got a break. They have a strong backing, especially by this administration, who's rolled back a lot of regulations. So, but ultimately, when the banks fail, go down. And again, from a technical perspective, J.P. Morgan, the king of them all, already peaked there, broke down below this trend line, has been back testing it from below. I'm going to tweak this trend line I gave you. We got a little wedge going beneath. So watch JP Morgan, watch Visa, MasterCard. Visa's an active trade, has been for a while. We shorted it somewhere in here. Hit our first, second, third target. And this has just been really nice support. Look at that trading range. And so once that goes, you've already taken out you're starting to take out the 200s, let me say. Visa, like a lot of big companies, the 200-day moving averages define the trend. Once they go, it's safe to say that stock has probably started a new downtrend. Then you start shorting rallies back to the 200s. When they lost them there, you had a drop of about 25% Visa, and that was still in a strong bull. It was a correction within a bull market. So either way, this one's taken a while to get there, but I haven't changed or modified these targets. You just have to drop below this trading range here. And if you do so, it's really nice now because it comes in with that primary uptrend line I've had on this chart right here. You can see the uptrend line that comes off the October of 2023 lows. And so that would be a double whammy, both price support, because again, everyone looks at different things. I always say this, some traders really put a big emphasis on the 200-day moving averages. So once we clearly lose the 200s, not just little, they get these little whips and the traders come in and buy them. But once they're clearly lost, that's usually the where the sellers will start stepping in because the stop loss orders are there for the longs. But I like this even better. So it's triple resistance. It's the price resistance, which defines the bottom of that trading range around 333, the uptrend line I just showed you, and the 200-day moving averages. So When it happens, I expect it to be a fairly swift ride down to T4 and then my other targets here. Okay, paused it there to take a phone call real quick. All right, so that's it. These are still the next targets, and we need to break that. That's also going to be a kind of a tell on the sector. Both consumer spending, there's MasterCard, and they're making changes. There's some changes in the wind right now for the credit card industry. If you've been reading about that, and they might no longer, they might allow certain merchants to start refusing to take those high points credit cards. And we'll see what the shakeout there is. Up until now, the laws say if you take Visa, you have to take all Visa cards. If you take MasterCard, you have to accept them all. So anyways, that's it. So it's good. We need to, point is we need to get the, the financials rolling. Regionals are still, we have a short on the regionals, in particular, a couple individual ones. I think Fifth Third, I know, and then what's the other one? A couple ones. So again, these guys, it's working its way down, hit our first, second target, took out that little trend line, but plenty of resistance overhead, and also offering an objective entry. I usually do my best to not jump on. I'm very contrarian, and I don't sit here and, something breaks down, I'll highlight a breakdown or a breakout that's bullish or a breakdown that's bearish, but I put a lot of effort into highlighting where existing trades not only offer objective entries and exits. That's something that I've always said. It's one thing to get into a trade, break out, enter a trade. Most people struggle with where to exit that trade. In other words, not sell too soon, but also not stay too late to the party where you get back a lot of profits. So on this one, I can just tell you this is an objective entry. This is an objective entry as well if it happens to come up here. And this is still the next target, and I'll most likely be adding additional targets but I need to see the overall financials break down. Again, XLF is important, the bigger banks especially. All right, what's next? What do I have here? Oh, I know one I wanted to see it moving today. I've been watching Novo. This is another one, very much still an active trade. And I'd encourage you, you can go through these, go through in the last several updates I did in a video. I told you on my trade, we entered it, nailed it right off this is a long term. It was an entry on the long term charts. This is a long term trend line right here. And so we bought it, and price support right there. So we bought it there. I gave you 2 sold targets on the weekly chart for what I call less active or typical, what I call longer term swing or trend traders. A trend trade, this is a trend right here, right? This is a bullish trend. This is a indeterminate sideways trend. This is where swing traders are going to swing this range, or they'll swing, this is what I do a lot in the markets too. Try to gain pullback. So swing traders are zigging, zagging. This is a weekly chart. Every candlestick's a week. These are mostly double-digit moves, but this is a trend. That's a trend. That's a bear trend, right? And so these are trend targets. Longer term, they would take months, sometimes years to play out. And again, all these charts on the site. So we hit my first target to the button, pulled back, and several instances in the most recent updates on this one, the videos, I told you my preference. I booked profits at T4. We got close as we're coming up to T5. I said, don't hold out. They're probably going to step in early, the sellers. You probably want to sell early. That's exactly what happened. And throughout here, including the most recent updates, I said several times that I suspected that they would come down and retest these lows, the recent lows, and that would be an ideal entry. And we just did it, and we're moving up nice today. What happened is this one, they backed out of that deal. They were in that bidding war with Pfizer, I believe it was, over a small biotech company. And it was getting insane, the amount that they were upping. And I'm glad to hear for Novo's case that they didn't. They finally pulled out of the deal, and Pfizer won. I think Pfizer's going to be a big mistake. They're probably overpaying. Anywho, I just wanted to say now it's moving, and the news is, as I checked the headlines, based on that, which I figured would be a net boon to them. Here it is. So Yeah, they stepped back from the Metsera deal. They were really chasing after that. So anyway, and that's what they're citing the move today. And again, it's technical induced. This is exactly what I was preferring to see, wait and see. So I wanted to highlight it. We not only made that test of that recent low that I was leaning towards, and also now starting to move impulsive off there. So now it is an objective reentry. Already was and still is, with a stop somewhat below. And look what you have now, what you didn't when we bought it back here. And that's one reason that I was leaning towards another test of the lows. We didn't have positive divergence on the daily there on the PPO. Now we do. So anyway, that's and it still looks good. Again, this is swing trend trading. Boom, enter, exit at the first target, which is a very, very good. That's the point it was there. Downtrend line and price resistance right there. Pull back, and you still very much have the positive divergence on the weekly, and so that's it. So again, like any trade, it either works out or it doesn't. At this point, a stop somewhat not too far below the recent lows. It may want to pound out a bottom here and test, or maybe undercut them again. So again, your somewhat is relative to your price target, where you think the stock is going if you are in it or plan to be. My second target will be a 60%, 57% rally from where we're at. So you could easily give yourself, let's say if you gave yourself a 10% stop loss, that's better than a 5-to-1 RR, right? And you don't even have to go that much. I'd say somewhere a little shy, about 7-8%. Again, if you're targeting that, if you're only targeting another pop up, but it's a bottoming play. So, we already milked that initial pop. If it's just a bear market rally, but again, I already talked about it. This is a great company and it's down, dropped 70% off its high. There's some value there. Novo Nordisk is not closing the doors today, tomorrow, next week. That I can guarantee you. I think that's it. I kind of had a couple of things jotted down on my notepad. Let me just hit the VIX real quick. Talk on that, even though it should have been covered with the markets. Nothing's changed in my outlook or my targets. This is on the daily chart. We had these targets here. We're still coming off that divergent low. We're still well above it. VIX is starting to perk up, broke out of the bullish falling wedge. Hit my first, second, third targets, 28.62, reverse pulled back there. And then had this other run up recently. 21.92 is still nice resistance. The fact we checked it again recently means if we pop it, we're probably going to go up there. And we've already checked all these targets. So again, if, and it's a big if, but an if you want to move on fast, in my opinion, if it happens, we take out last Friday's lows in the markets, especially, I don't think the markets are going to go too far until Nvidia reports. That's my guess. You're going to have to be patient here, and you're going to probably see some whipsaws and volatility. And we can go the other way. And guess what? If Nvidia just kills it, and the market loves what they're selling, and the market goes to new highs, yeah, VIX is going to go down. It's probably going to go here, at least back to the trend line, the primary uptrend line. This is my daily chart, and price support right there, and it could even go down lower. So you never want to fall in love and hold the VIX, especially if you're using one of the VIX tracking ETNs like VXX or VIXY or whatever. VIX futures, same thing. You're going to roll them, but then they're going to go down and as well. So as of now, still like it. As of now, again, this and Friday's lows are one and the same. The VIX is basically the stock market in reverse. There's Friday's spike high into that 21.92 level. Remember, we hit it there first, had a pullback, then we took it out, hit the next two targets. We hit it again on Friday. So basically, if the market breaks Friday's lows, by this logic, it should also break out above that 21.92. And if it does it again, like I said, I think that will be the let loose level, kind of like I gave you on UNG. Been talking on UNG for months. We entered it all the way back here, was our initial entry on the breakout. As we hit my first target, told you if we took this trend line, they're probably going to run and undercut the lows and give you a false breakdown, which they did. It was nowhere near violating any reasonable stop. It was almost back to entry. And then this is that level where I believe it will most likely start to accelerate. And ideally, what will be really nice to see this potential negative divergence, potential because it's not confirmed. You have to turn back down the indicators. If they can burn through that, which Natty can do. If she wants to run, when she wants to run, she can really run. So Crude's up today, which is probably going to stall out here. Remember, that's why I give you price targets. Upon the initial tag, each target, a reaction's likely. That's certainly what happened there. Certainly what happened so far today. We hit T2 at 1462. And go to 1 minute chart, see what happened when we hit 1462. We were going straight up to it. Oops, that's not an arrow tool. This is, and then, no. Click, click, click. You gotta click these buttons really good. That's why half the time I hit the pause button and I'll go back, resume the video, and it doesn't unclick. It's like they're sticky buttons, even though they're virtual. That's it. So there's your reaction. And what if we really want to see to help it would be to see crude move lower. Crude's kind of bouncing around in that big sloppy. It's best seen on the weekly chart. This is USO. It doesn't track crude perfectly, but it does about as good any job as a ETN that rolling crude futures can do. And again, this is just sideways noise. It just helps when crude's falling for natural gas prices. But you know, they can sometimes do their own thing. I've seen them rally together. I mean, at the end of the day, I'm going to trade nat gas based on its own chart. I just wanted to say this would help. Just like with gold, the dollar, silver, I told you the dollar, we'll cover it. I just gave you an update yesterday on it, but that's it. So when the whole world was bearish, the dollar was going to zero, going to keep falling, not zero, but highlighted here is a long trade, bullish, big bottom of the big basing pattern, trading range. Not basing pattern, trading range, multi-year trading range. And that's it. And then waiting. We broke out of T1, and this is where we started to get that point of recognition when everybody, and I mean everybody, was foaming at the mouth bullish in silver. That's what put the brakes on that rally. Well, it was technically induced too. We had a breakdown there in gold too. And so you had the correction, and then somebody asked, I gave you an update yesterday. This was this recent rally in silver and gold, of course, was not mere coincidence. It's that traders are recognizing the dollar sensitivity to gold and silver. So we had this pullback in the dollar that started right here. Go right here. We had a pretty decent pullback. It started on Wednesday the 5th. And there's the main one, gold. And you can see over that same time, gold rallied, right? So the dollar was rising, and then traders started to get the memo. This was our sell signal in gold back there, the trend line break. First, second, third, pretty much the fourth target. Dollars, nothing goes up forever. The dollar's correcting, so gold went up. And if I'm right, and we thrust on up to that next T2 level soon, the dollar starts another rally, then we'll probably get that one more final leg down in gold and silver, and it'll hit my fifth and final target zone right there. All right, let's just wrap it up here. Get out to you. Those are the things I'm watching. Financials are still holding up now. Need to see those buckle. Break down. You have the levels to watch. Like I said, it may be a bit of a grind here in the next week or so with the shutdown pretty much ending or scheduled to end. Nvidia coming up. It's going to hang over the market for a while. Plus, remember, you're going to get as soon as they turn the spigot back on, the lights back on for the government, you're going to start getting reports. Some are going to come out sooner than others. Some will be incomplete data. So that in itself, too, is most likely going to lead to market volatility. Volatility, by definition, is ups and downs, not straight. Usually people associate it with a dropping market because that's when the VIX is rising. And again, that's all. I'm just trying to set the expectation. We may see some noise. But like I said, today, the only the most technically significant development today, other than the rejection, off that bounce, the resistance zone on the NASDAQ futures I gave you yesterday, which is nice to see, is the semis above, clearly back below the trend line after a back test there, SOX. Boom. Okay. All right. Let me wrap it up here. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. If there's a trade I missed, anything you want an update on, feel free to bump me and I'll in the comment section, and I'll get back to you as soon as possible. Have a great day.